Number one rule of Wall Street. Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles. Least of all stockbrokers. Right? It's all a fugazi. You know what a fugazi is? Stay with me. So if you got a client who bought stock at 8 and it now sits at 16 and he's all fucking happy, he wants to cash in, liquidate, take his fucking money and run home, you don't let him do that.
Okay.
Because that would make it real.
Right.
No, what do? You get another brilliant idea, a special idea, another situation, another stock to reinvest his earnings and then some. And he will every single time because they're fucking addicted. And then you just keep doing this again and again and again.
Welcome to Market Makers, everybody. You will want to watch this pod until the end because our next major Bitcoin trade is setting up right now as we speak. I'll show you in the charts. Remember, October 23rd, last year, I gave you the 50% long winner breaking out from our diamond pattern from the fractal high. Go watch the YouTube video. It's there for you to see. For weeks, we spent setting up the short at the 618. That gave you a 20% drop this year. And now the next trade is setting up for a 30% winner. This is Market Makers. Tomorrow's TA today. Often imitate it, never replicate it. And in that vein, Tom Lee yesterday, Yahoo put this out yesterday, released to his private clients this chart. Lee, show him the slide. Where have you guys seen this chart for weeks? On this channel, it shows the wave movements, the 20% up waves, the 10% down waves, and Tom Lee's expecting a 10% correction. Now, the article goes on to say he researched 100 years worth of data to verify when you have 20% moves, the correction size. Guys, not to brag, but I put that chart together for you in about 30 seconds. I thought it was blatantly obvious that's the pattern that we're tracking to, and you saw it on this channel. It didn't cost you thousands of dollars to be a member of Tom Lee's private clients. It's free. And what's better than free? Guys, we had some price action here in the charts. Remember, we're trading these Ponzi markets just like the intro. The people you see on TV have no effing clue what's happening in the marketplace. They are money managers. 84% of them cannot beat the S&P over a 10-year period. Your grandmother, your friend, your family member, your child, if they could invest in just the ETF for the SPX, would beat these people you see on Bloomberg and on CNBC. They are simply car salesman. You ever go buy a car and you know more about the car than the car salesman? It's the same in this space. Their goal is to get your money, to invest your money for you, to always buy, to charge you fees. This channel is about financial freedom, but be on the lookout for these guys.
You can buy small caps for 12 times forward earnings.
We got Chevys.
You can buy mid caps for 13 or 14 times forward earnings.
We got Ford.
You can buy large cap basic materials 9 times earnings. I feel like
we got trucks like this nice Nissan Titan right here. Get yourself in one, drive it home. Your wife's gonna love it.
Lee did such a good job with that. Guys, without further ado, like and subscribe if you like this content because we are shadow banned. And let's go ahead and start the show, Lee. Run it. All right, guys, this show is brought to you by SimpleFX and BingX. If you want to trade these Ponzi markets, watching my vlog here, then please check out our sponsors. They support the program. SimpleFX will give you up to a $5,000 first-time deposit bonus. No games, no gimmicks. You don't have to roll it over. There's no tricks, guys. Use our link. It's exclusive to our link. You can message Lee in the Telegram if you have any questions. You can trade all the global markets, commodities, equities, Forex, and including Bitcoin and cryptos. And of course, BingX for traditional Bitcoin exchange, crypto exchange to trade the myriad of altcoins as well. Guys, let's go ahead and look at the screen because this is the chart that I've been showing you guys for weeks that Tom Lee just discovered in his frantic research. So we have these symmetrical moves. This is the modern market. This is the current market that we are in now. October 22 low, 2022. 20% up move, 9% correction. And of course, the 21% up move, 11% correction. Easy math. For those of you that struggle with math, 10% average, 21% up move. And I'm expecting a 10% correction. Okay. Doesn't matter what price does. I'm going to show you where on the charts this is going to start to break down based on what? Based on the fractal history of the markets. I am a fractalist. You're going to see this in the charts. So this is known. What some of you, especially the new subs, we got hundreds of new subs. So welcome to the channel, everybody, over the last few videos. But this is the Y2K market. Notice the exact same fractal patterns presenting themselves. What am I talking about? July 1999 high. October 1999 low, did the same moves last year. Run up into January, February. Here's your February correction. Notice the percentages are the same on the waves up. 20% move up. 10% correction, 10.35% correction. This pattern actually started breaking down here in January. And here we are approaching mid-February, but I'll show you where we are in the modern markets and why we're going to break down here coming very, very soon. And this is the move we're expecting, guys. I'm expecting the bottom to be around mid-March now with the breakout timing that we're doing, or the breakdown timing that we're doing. And then we're waving back up for a new all-time high before selling off into the summer. Remember these moves: July high, October low, rally up into January, mid-February, sell off into March. Then we're pushing up for a new all-time high and then selling off into the summer and taking out our low. All assets will be on this train, including Bitcoin. Let's move forward into the charts. Clean chart, ES1, looking at it now, 5,007, starting to dump a little bit. Where did we find this resistance? We found this resistance right here, 5,013, 1618. This is going to start to roll over. And I'm going to show you this once again on the patterns. But when we look at this, guys, look how this is starting to play out here. So we have our MFI. Let me go to the daily time frame. This is the 8-hour. On the daily time frame, of course, you have your bearish divergence. Look at the momentum, okay? Look at the momentum here. This is a momentum indicator. Look at the momentum. Look at the divergence you're getting on these waves. The breakout to the upside. This is going to roll over, okay? It's going to roll over. And when we look at the fractal pattern, guys, let's go ahead and do this. Let's go look at this fractal pattern. When will this actually break down? Let me get back to this one. Let's look at February. So let's move over here to February. This is the modern market. So let's go ahead and track this. Here's our February correction. Now we made that February 2nd high. We didn't take it out, but in the modern market, or the current market, we did, okay? So there's your February 2nd high. This sold off into March 13th was your bottom. But when did it actually start breaking down? It actually started breaking down February 16th. See it there on the screen. Let's go back because you're Brendan, I get it. And Y2K, that fractal, it broke down in February. Coincidence. Last year, it broke down in February. Coincidence. I get it. It's all coincidences. Let's go to 2022. Again, the exact same breakdown. Here you double top. But when did it start breaking down? It started selling February 10th. When did it bottom before it rallied back up? This movement that we're looking for. It bottomed in February 24th, but the actual rally did not start here until March 15th, as you can see. Slightly higher low here. March 15th started pushing back up. So we're going to be selling off into February. Brendan, bunch of coincidences. Sure, it happened multiple years in a row. I bet you can't find this February correction and the strongest bull market push up in stock market history? Well, yes, I can, because remember, this is 2021 now. This is after the trillions in stimulus from the pandemic, the plague that was released upon the world. The market was flying up. Remember, the S&P typically in the modern market was returning about 10% gains over a year period, right? So 20% over 2 years. And in a 2-year period, you went up 120%. It's a bubble, okay? Here's your correction in February that you did once again in 2021. You started this correction. Let's go ahead and throw this here. When? February 16th. When did you bottom? You bottomed over here March 4th. So again, the corrective move is coming up. Now, I think we have Options Expo, I think, February 16th. So I think by February 16th, in that time frame, I think that's a Thursday, that Thursday, Friday, which is end of next week, that following week, if you haven't seen it already, is going to begin the breakdown in the marketplace, the breakdown for our 10% correction. So what we want to do, knowing this information, knowledge is power. And by the way, you keep going back 2020. 2020 was the plague, but you pushed up into February, you sold off into March, and then we had the massive bounce back up. You know, Einstein said coincidences are God's way of letting you know that he exists. So these are called fractals, guys. These are repetitive movements in the market. These are cycles. And the fractals is the nature of the candles. So much of the modern market is traded vis-a-vis algorithms, but they leave digital footprints. This is why people on YouTube that say things like react, don't predict, they do not understand what a pattern is. A pattern is the marriage of price and time. It gives you the predictions. That harmonic union of price and time is when you have pivot points in the marketplace that you can trade. Let's go ahead and look at this. Here we are on ES1 once again. Let's get some targets. Let's zoom out to a larger time frame. So let's go to the 3 days and look at this. Where could this break down to when it starts breaking down? Well, this is going to be rather simple here. So we want to look at this from a couple different perspectives. Let me get some of my previous drawings off here. Look at this from a couple different perspectives. We can pull this from our rally high, or rally low, I should say, October 2023. Most commonly retraced to fib is 44.65, knowing that we're going to be pushing back up into a new all-time high, which is my TA here, guys. But let's just go ahead, assuming this is the current high, this may change. We'll have volatility between here and when the market starts breaking down. Let's just look at what a 10% correction does, though. It doesn't get you down to that 44.65. The key area I think you're going to have to struggle with here is going to be that 4,600 level. That's my target level. And so just beneath it at 45.05, look at the 1618 from this last leg, the last breakout from this 4,800, pushing up above the 5,000 here on ES1. When you look at this, the 1618, 10% takes you to 4,500. 4,500, if you can get through the 4,600 level, would be the target. If we put this on the daily, you can see this a little bit better, the pivots that I'm talking about. Because here's your pivot. I think this gap is going to get filled, but here's your pivot just above it. Let me highlight this with a line. Go ahead and throw this here. That's at 46.07. You see that? So I think you're going to try to fill this gap maybe with just a wick. So my higher level target here is 46.15 at the 1272. The lower level target for a stronger correction, a 10% correction to match all of the corrections and the current wave cycle, you're looking at 10% at 4,500. If it came to that 46, you're looking at the 8% correction. So 8 to 10% correction is what we are expecting with that breakdown to begin here, end of next week, following week, mid-February, which means we're bottoming in mid-March and then pushing back up for our all-time high, spring equinox, which is March 21st, into April. You're going to have that all-time high. I want to be short here in these markets, and then I'm going to be long at the bottom in these markets. Let's jump over to NASDAQ and hold on, Bitcoin friends. I'm getting to Bitcoin. It's next. I'm torturing you and making you watch the first parts of this video. Guys, I've showed you these wave patterns because they're so prolific on the NASDAQ. It's so easy to see these patterns. We have price pushing up, little head fake breakout before the correction. But these are 5-wave moves here. You can see it with the 5-wave count. 5 is a completion of a harmonic cycle. But once again, this is nothing more than 3 waves to a top. Here's your top 1. Here's your top 2. Here's your top 3. Again, wave 1, wave 2, wave 3. And then you have it over on the other side as well. We covered this last video. Top 1, top 2, top 3, wave 1, wave 2, wave 3, and you can get a 5-wave count as well. Law of 3, guys. Law of 3 patterns, 3 and 5 is what you need to know when you are a pattern trader. So we have the NASDAQ pushing up here at 17,874 on NQ1. This could go a little bit higher, guys. Volatility between here and when the S&P begins to break down. So the best way to track the NASDAQ, the best way to track the market is with the Magnificent 6, Magnificent 7, which is actually the Magnificent 4 now. I did a live stream on our Discord. By the way, guys, first month in our Discord is free. If you want to check it out, financial freedom seeking community. We do live streams, block state updates. BingX and SimpleFX will pay for your first month. Again, message Lee in the Telegram if you are interested. But let's look at the Mag 7. Let's start off with the strongest ones first. Strongest ones, NVIDIA. Pushed up, hit the 700, got the 7 handle on there, putting in a doji. NVIDIA is going to top. Look at your MFI, money flow, turning bearish. Look at your momentum, bearish divergence. Could it go up higher? Could it go to 710, 720? Sure, doesn't matter. Time is more important than price. Correction is incoming. You're putting in a topping pattern, in my opinion. Next strongest one, Microsoft. Retesting its fractal high here. Microsoft also putting in a topping pattern. You have bearish divergence as well on the money flow. This is going to roll over in the correction. Next strongest one, Meta. Whoop, got to pull this way up. This gap on Meta, by the way, this will be filled in the correction, okay? And you're looking at this 406. Meta hasn't taken out its high. This was a super strong stock, added $200 billion, billion with a B, in market cap in a single day, greater than the market cap of McDonald's, okay, in a single day. But you're putting in a topping pattern, side-by-side candles, euphoric rise, 10% correction coming in. Meta's going to sell off. So when I'm looking at, has the market structure changed? It has not. Now, if Meta takes out its high, Microsoft takes out its high, NVIDIA takes out its high, and they all start pumping, Amazon, the next strongest one, the Mag 4, Amazon takes out its high and starts ripping up, then yeah, the market can keep pushing up. But guys, we have not got to our mid-February date yet of when the market is going to start breaking down. And I believe we're going to track just as we have for the last multiple years now with this February correction into mid-March for the bottom for our next long trade. This gap will get filled in Amazon. Topping pattern, putting in side-by-side candles, dojis. This is euphoric. This will die. Tesla, what about this? Guys, we've been tracking Tesla so closely on this channel. You have, once again, the exact same law of 3 pattern. 3 waves to a bottom. Top 1, top 2, top 3, wave 1, wave 2, wave 3, right? Tesla, the reason the market's pushing up is because when these Mag 7 sold off, they're all bouncing. They're all bouncing, but they're just bouncing off of their lows in the case of Tesla. This is not any longer really part of the Mag 7. Tesla's going to sell off more. So looking at Tesla, very weak, no longer could be considered one of the strong contenders there in the Mag 7. What about Apple? Well, let's just do some basic YouTube TA, which is what's pretty much all over YouTube. You have your high, you have your low. You have your lower high, you have your lower low, and you're putting in a lower low. What else do you have forming on Apple? Well, once again, guys, wave 1, wave 2. This will be wave 3 when it comes down. Top 1, top 2, top 3. Trading is not that hard. Controlling emotions, much more difficult than actual trading when you understand patterns and the nature of price. What about Google? Google has a gap. Could it fill the gap? Sure. Could it fill the gap, rest of this week, next week? Sure, it could. Again, volatility in price, but Google is topping out as well. Google will roll down with the market. So when I look at these stocks individually, guys, the Mag 7, You're down to the Mag 4. Market structure is not changing unless these all blast off, okay? If they all blast off, then great. We could be going higher. But until that happens, we have the February correction incoming, okay? This is going to be a great trading opportunity. Now, boys and girls, let's get to the price targets of the NASDAQ, and then I promise we will get to, what did I do? I promise we will get to Bitcoin next. So we'll just have to do this chart separate. Doing it live, guys. Doing it live. I need Bill O'Reilly here. So 17,884 right now on the NASDAQ. Where's the NASDAQ going? Well, similar concept here, guys. So we have that correction coming and the NASDAQ will correct more. And of course, we're pushing up. So take this exact number with a grain of salt here because we don't know what the actual high is yet. But when we're looking at the NASDAQ, 1618 is 15,949, putting you right back into this pivot area here for the NASDAQ, okay? So that's my first target here. When I look at this from a confluence standpoint, again, I could take this from the October low to this current high. I look at my 1618 and my 618 is down here at 15,571, which puts you back in this fractal top. Let's measure these really quickly here to see what this drawdown would be. We know that the NASDAQ will move at a higher beta than the S&P. So 10%, 11% would be your shallowest retracement, right? But if you get a 10% retracement on the S&P, you could expect this most likely to come down stronger, maybe to the 618 at 12.99% at 15,571 on NQ1. Now, Bitcoin, for those of you that have patiently waited. Let's talk about Bitcoin because this thing is starting to pump, which, by the way, if you've been watching the channel the last couple of weeks, I predict it when the markets move to start topping, Bitcoin, because it's leading, is going to push back up. So when we look at this pattern here, I shared this last video. We look at this pattern, we're looking at this W breakout to our target, okay? So let's go over this because I know a lot of people are going to be interested in our Bitcoin trades. I'm going to pull my fibs, 1618. This is 46,650. You are at 45,415. Now, a couple of things to notice here. The 1618 at 46,650, if you pull your fib here from this fractal high down to that current low, the 786 from that fractal high lines right up at 46,750. So let's go ahead and take that off so you can see that. There's your 786. This is where I would like to see Bitcoin top. If Bitcoin starts to top here, I'm going to be looking at trading this. This is a lot about timing because this is Bitcoin. What does that mean? It's parabolic. Could it easily retest the high at 48.9? Of course it could. Could we get the max FOMO head fake? And then you'll see YouTube with all the predictions coming back out. I told you we hit 50K. Now we're going to 75,000. Yeah, of course you could. So again, I'm looking at this as a kill box. I want to see Bitcoin hit this 786, get into this range, give me a pattern. And what are the other markets doing? Are they still inching up over the course of the next week? Or are they starting to top and get volatility and drop and push up and drop and push up? That's going to give me confluence for what I'm seeing in Bitcoin. But guys, the targets for this, let's look at this because I'm looking at this level, 46,750. Pushing back up. Remember your 618 that we shorted up here for this 20% drop. The 618 is right up here at 48.9. The psychological number of 50K is just above it. And we have the S&P that hit 5K. Well, actually on the cash index, I don't know if we hit it yet this morning, so I'm making this video, but I think we were 50 cents short of 5K. But again, psychological number. That's what we're looking at. So let's zoom out. This is our breakout trade, right? October 23rd. Made the video. You caught this massive move, took out the fractal high from the diamond pattern. This trade took weeks to set up. I like to swing trade. This trade took weeks to set up and you get a big reward. So when we look at the targets, guys, where could this go? Let's just say whatever the level is, right? It gets up to that 46,750 or it comes out, hits its head above 50K, psychs everybody out. Where will this go? Well, there's a couple of ways I want to look at this target. First way is just from this low from the current range that we are at. Let's go ahead and put this at 46,750. 750 right there. Okay, 46,750. 1618 is 33,460. So let's just call it 33.5. So 33.5. If we come down from this level here, 46,750, 799, close enough. Come down that this is a 28.5% drop. Now, if you notice when you're looking at the market structure, your pivot's a little bit lower. Do we have any candles over here? You have some candles, but they're a little bit lower, and it's Bitcoin, it's beta, so it could go lower than this. But let's go ahead and pull a fib as well from the base of our diamond pattern up to this current high. And look what happens. You see this Fibonacci magic? This is called confluence as a Fibonacci trader. For those of you that don't see what I'm talking about, look at the 618, 1618, 33.6, 33.5. So this is my target for Bitcoin, a near 30% drop, depending where we drop from. This is a target right now, 46,750. We're on our way there at 45,450. Let's see what happens because, again, we could be poking our head up to that 50K region, key psychological number. You guys are getting this sigma here on this channel. So I hope everybody takes advantage of this. All of this, by the way, guys, forgot to say this in the beginning. This is my video vlog. This is all entertainment and education purposes only. I am a trader. I am retired. I do this full time, and I'm sharing this information with you. So again, like and subscribe if you appreciate this information. Let's look at the DAX. DAX is still struggling, 17,072. DAX is at 17,060. Done the overlay many times with the Dow, so no need to do that. But what does that mean? When the US markets roll, the DAX will also be correcting. We just want to look at a corrective move here on the DAX, where this could get to, again, using the current local high. Looking at the DAX coming down to 16K, which makes sense with this pivot right here at the 1618. So 16K on the DAX. And of course, you have the pivot here as well. If it breaks that pivot, it could be going lower. The next stop, logical stop, would be somewhere 15.5 to 15.7, 15.8. Okay, but I'm looking for the DAX 16K when the US markets begin to roll. Look at the Dow. Dow couldn't take out its high. So we had the Russell actually selling off when the NASDAQ and S&P pushed up to their all-time highs because the Russell, once again, key divergent cycle. That's beta. That's small caps, easily affected by the corrosive and eroding economy. And then you had the Dow put in its all-time high, but couldn't take it out. And now it's doing a pullback, 38.7. So watch these are divergent. Okay, these are divergent. Also, again, just gives you confluence for a top coming in. Current Dow top is 38,892. You're at 38.7. You're pulling back here. Could you spring back up once again? Again, we have all of this week going into the end of next week for volatility in the marketplace, ups and downs. So it's possible 39,000 would be your next level up. If we look at the Russell, guys, this is down over 20% from its all-time high. And every economic cycle, talked about this with bubble cycles. I talked about this in my live stream yesterday. Key divergence cycle, 1929, Nifty 50, 1972.com. The beta stocks all lead the charge. When the beta stocks, just like in 1929, fell off, but the blue chips, you hear this referred to as late cycle. You hear this referred to as when they talk about the breadth, the market breadth, we have really narrow breadth, but it's going to expand. It's the reverse. When you are in a massive bull run and you lose the leadership of the beta, because the beta is supposed to lead, it tells you the bull run does not have legs, which is why people have been praying for the Russell to break out. Down 20% still, which is a technical bear market in the Russell from its all-time high. The Russell, Bitcoin, NASDAQ, all topped out November 2021, sold off massively. The S&P continued to push up into January. And where we are now is a stock market being held up by the MAG 7, 33% of the S&P on the index market cap weighting, okay? So you have the leadership, it's just a handful of stocks, and when they start to sell and come down for this correction, it's going to be, according to TV, according to a lot of people on YouTube, the buying opportunity of your lifetime, which is why you will get that euphoric rise back into late March into April for the new all-time high prior to the next sell-off with the decay in the economy. So that's the Russell, guys. The Russell's at 1976. We'll see if the Russell can hold here, but when the Russell starts selling back off, look for the Russell to come down into the 1800s, 1813. And I think that's all I want to show, guys. I hope everybody has a fantastic weekend. It is Super Bowl weekend here in the USA. I'll be at a Super Bowl party on Sunday at my buddy's exotic car company. So hopefully I can get him to drink some tequila. That's his weak spot. And he lets me do some burnouts in a Ferrari in the parking lot. If he does, I'll take some video for you guys. But I hope everybody has a safe weekend and enjoy the game. I'm going to try to put out the video on Sunday still, but it may just be Monday, guys, because of the Super Bowl. I don't think anybody's going to watch a lot of TA videos on Sunday. So look for that. Once again, happy trading, everybody.